with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion Triple Leverage Semiconductor Bullish ETF, which goes by the ticker symbol of SOXL. Make sure you're following us on X at the handle Bullish Chips. Get real time tweets on our entries and exits on scalps and intraday trades, as well as short term and long term swing trades. Just a reminder, we are not financial advisors. We do not offer financial advice, but what we do offer is our view on the price action for SOXL, not only in the current day, but in the past, as well as where we think price action will take us in the future. My name is Chris. Today is Monday, July 21st, and we're back looking at the day chart, where we can see the day finished not quite an inverted hammer, more of a doji, but excuse me. It indicates price action was explored to the upside, but was rejected. We did make it outside Friday's high. We also made it just above last week's high. So we did go 2 up on the week. If we go ahead and take a look at the week chart, we did go 2 up on the week. But again, looking at the day's price action, it's not exactly a bullish candle, to say the least. So once again, we're looking at resistance at this year flip. We got above it and closed above it for a few intraday candles in the morning, but price did reject back up under it. So we're still contending with the week flip or the year flip here at 28.13, which again would turn the year green. Right now, the week is slightly red, but we have the month and the quarter, which are green, but the year is still red. We did get the 2 up on the week, so we did get a higher high, or we continue to make highs. But again, it's only Monday. We're contending with not only the year flip, but we're contending with this weekly broadening formation here, this solid purple line, as well as this monthly downtrend line, which is this dashed green line. Not to be confused with this green line, which is the 50-day moving average. The blue line is the 200-day, but this dashed yellow green line going diagonally from top left to bottom right is a monthly downtrend line. So matter of fact, we can go ahead and zoom out and just look at the monthly, and we can see from the top of October 2024 and the top of January 2025, we do have a downtrend line that it coincides with the year flip and the weekly broadening. So by itself, we wouldn't just take this as we're gonna turn down, we're gonna reject here, or even that we would have resistance. But it's the fact that this lines up with the year flip and this weekly broadening formation is those all coinciding at one place is giving us a signal that there is going to be some resistance, and that's what we've seen so far. If we go back to the day, excuse me, we had we've had a good push up, a little sideways action, good push up, but again we've got this daily broadening formation that's formed here. We've got to the top of this move, and instead of just doing a straight flag, we are getting more of a range that is creating a broadening formation. So this high was higher than this high was higher than this high. However, this low was lower than this low. So we are looking at a daily broadening formation. This candle, while it did reject here, you never know. We could just get basically a candle like this in reverse with possibly even a smaller wick, but just a failed 2 down, where we go 2 down and finish green to make a higher low on the day and continue to the top of this broadening formation. Or we could be hung up, this 27-ish area is kind of like the midpoint, and we could be getting caught on that, and we're just going to go back down to test the month and quarter flip, the weekly uptrend, as well as the lower broadening formation on the daily chart. So just keeping that in mind. Again, we're not saying that we're going to go down. It's almost the same type of situation here where we got, a high, a low, a higher, almost a higher high. But in this case, it was consolidating instead of expanding. So we got a lower high, a higher low, and then, with the consolidation, we popped. We're not getting the same type of consolidation. It's more of a ranging consolidation. Again, it's still yet to be seen. But ever since, what was this, the 8th, we went up, we came back down to where, this 8th, maybe even the 7th was. We've been in this range for 2 weeks now. So just continuing to play, short-term scalps and day trades. Really, I've found myself playing more of those over the past 2 weeks or so than I have really in a long time that I can remember. Well, I don't want to say a long time, but ever since April, we've definitely had a trending market, right? It's just been this slow climb up, not necessarily slow in all cases, right? So we got a big push here, a big gap up, a little bit of a pullback, but then a big bounce off of that, a little bit of a pullback, a big bounce off of that. So we could be in this consolidate. Well, not could be. We are in this consolidation range. It's expanding though, instead of contracting. So expanding range can sometimes mean we're going to range for longer. Contracting usually means we're coiling and we're going to fire out of there. But an expanding range just means we're taking a long time to make the decision, and that's what we've got to keep in mind here. So let's go down to the 15-minute real quick and go down to, let's go to here. So on our intraday chart, we can see how the day started out. Big push to the upside, pulled back a little bit, but we found support off of the overnight high. If we go down here to the 5-minute, it'll be even more evident. But you can see we got the higher low on the 5-minute right at that overnight high. This is where we did enter some scalps. We went in an uptrend, somewhat of an uptrend here, where we got the higher high. Thought we were gonna get the higher low here. Thought we were gonna get the higher low here. Still didn't get it, but we stayed in because we were still above previous high a day. We were above overnight high, and we were above opening print. So those are three very bullish signals. And it was a test of this year flip, so we knew it wasn't just gonna go straight through it. We'd have some a little bit of a fight on our hands, and then finally we got this higher low here, so we were still in. We made it to last week's high, which coincided with the 1 hour broadening, this lighter blue here. This gray broadening formation here, this 4 hour broadening wasn't here. That I put in there when we went 2 down on the 4 hour earlier today. So this was a new mark, but we went up, basically wicked off of that 1 hour broadening and last week's high. Once we got to that level, you can go back to our Twitter or our X account, and you can see how we talked about reaching that last week's high, and that's when we went down to the 1 minute and started making sure that we were going to get all of our money for this scalp. We weren't in it for the long haul. We just wanted the quick money. And we could see here, once we got like the equal high, basically 3 times, well, almost 4. But then we were like, that's probably going to be it for us. We put a stop here at the higher low. So it didn't go make a lower high before it broke through it. So that was a little disappointing, but at the same time, we stuck to our rules. We took our profit. Profit is good. You know what I mean? You can always get back in contracts if they go back into the direction that you were in, but we had our profit taken, and it actually did make a lower high here. And when it pushed down, we were glad that we were out. But you can see how it pushed down to this yearly flip once again, and it basically rode that all day until the bulls ran out of steam about what is this, 10:45, 10:50, and that's where we start to see the bears step in. Let's get back out to 15, and where's our 10:50? Yeah, so here's like our 10:50 right there. That's where we get the drop. we did enter more longs on a 15-minute higher low here, but once we went lower high, we were willing to stay in it because on the 1 hour, first of all, we had contracts for August 1st, not this week, so we had some time to play with, but we were still looking at we hadn't gone two down on the 1 hour yet, so we hadn't locked in this lower high yet. Once we locked in the lower high, we gave ourselves a little bit of cushion on the overnight high as well, just in case it wanted to make a higher low if it was just going to consolidate. So we had our stop set below the lower low, or I'm sorry, the higher low on the 1 hour. It did end up triggering it. It bounced back up for a minute, so I was at first a little bit disappointed that we got stopped. It was a minimal loss, but we got stopped. But then when it went back down on the shorter time frames, you could tell it was getting ready to go back down again. So once we made this double top, essentially, or equal high underneath the year flip instead of being on top of it like we were before, then we knew tables were probably turned and the bears were in control. The hourly downtrend got set, and they did get a little bit of a bounce off the overnight high, but after that it gave way. And surprisingly, we did finish red. I thought we would finish green. I thought opening print would be good support, but we went two down on the 4 hour, triggering a 1-2 up, two down, 4 hour. So yeah, if we look at this, we can see we went 1-2 up on the first 4 hour of the day, and then we triggered the two down. So that's more of that's not more, but that's a bearish reversal right there. So it didn't run the full strat to its magnitude, which is the low of the candle to the left of the one. But we can always get continuation tomorrow. Looking at overnight, we're down 30 cents, which is that's a little over 1% for SOXL right now. So that's significantly down in overnights right now. Not like the rug got pulled, but to be down over 1% overnight, you don't want to just ignore it, but you want to keep it in mind. So we could get the continuation of the 1-2 up, two down. Like I said, this could just create a higher low here. We could Powell speaks in the morning, so he could say something that ignites the market, and we end up opening up, or gapping up, or doing something to go two up on the first 4 hour, locking in this as a higher low. In the same breath, if he says something that the market doesn't like, then we're going to get that continuation of the two down, and then we're just looking for the low of this three, which is 26.76. So just keep that in mind. We do still have a few, I think it's two. We got two puts left that we've been swinging just as some hedge. So we're covered in a way to the downside. They are down 30% at this point. Actually, let me double check. But they're they could come back into play tomorrow if like I said, if Powell does some. Okay, so they're down 22%. So they definitely could come back into play tomorrow if Powell says something that the market doesn't like and we push down. Those puts are going to come back into play. We'll gladly take profit on them tomorrow, but be looking for bounces at last week's 50%, which is this purple dashed line. Is usually a good bounce point. I mean, not a whole lot of other support really that comes into play. But if we're gonna set a higher low, we don't want to go below this three on the 4 hour at least. The day is basically the same because that three translates. The three on the 4 hour translates to this. Translates to this two on the day. So if we go below that, we do have more room on the day to make a higher low. So that's maybe where the support comes in. If we don't find it at last week's 50%, then we've got last month's and last quarter's high here at 2584, as well as the 78.6 of the 2024 run up, the 78.6 fib. So, that could be support that we're looking for to get the bounce. Um, yeah, I mean, I'm not looking to make a lot of money off of puts. If I make some, I make some, but I would rather the we finish out this seasonality that tech has on a strong note and push up. Just looking for a little bit of extra at the end of for the end of this month, knowing that we should be looking towards puts next month. There's plenty of time to make money off of puts then. So um, right now, just continuing to fill things out as we move in more of a sideways direction. Right. Again, on the daily, we're making this broadening formation right here. So we're just going sideways, making a bigger range each time that we go up and down. So we're at the top of this range. Um, since we made it to the top, maybe we just expect that we go back to the bottom of this range. Maybe we don't even continue with the broadening. Maybe we don't make it wider. Maybe it condenses. We just get the higher low or equal low, making it back to the bottom of the range. So don't be surprised if we're bearish tomorrow, or if price action goes down tomorrow. So not much else more to say about the current day's price action and where things could go. We've got a pretty good idea of that. We already know on the longer term type of look, we're looking for 32-ish area would be nice, but the higher high on the week is 32, 33 almost. Then we've got 36 for the next higher high on the week. So 32 would be nice to get to, but we know we're running into resistance, just not only with the levels that I pointed out here, but if you just look to the left, I mean, look at all of this. This is all chop right here, right? Up and down action. So it's a lot of people, a lot of money here that could be overhead supply, acting as resistance to push us back down. Um, if there's shorts here, they're gonna be that bought here early before this drop, and if they're still in for whatever reason, they're gonna try and defend this level because it's gonna be their break even. They're gonna want them to make money making it go down, so they're gonna put in a fight. But again, we're at 8 weeks now, so 1, 2, 3, 4, 5, 6, 7. Well, we were green on the day, but we finished red. But if we finish this week green, that would be 8 weeks green for SOXL in a row, which would be a record. I went back again and I didn't find any over 7, and even the 7s were rare. So keep that in mind as well. Are we due for a pullback? We're not going to just go off of, we've reached 7 weeks, we're going to pull back, but it's just another reason to have some pause at going heavy on any new longs. Seasonality again. September, October is not good seasonality for tech, so again, just more reason to pause before going heavy into any longs. So, especially swings, unless you're going to get like a 27. But even then, if we're expecting a pullback, why buy now? Keep your money where it's at. Maybe if you should have at least a high yield savings account. Maybe get you a 4-week T-bill if it's that going to be that big of a deal that you don't want to use it. You want to wait for this pullback. But even the 4-week T-bill, you might miss the pullback. But have somewhere where your money is still working for you. I don't know, buy some CEFs out there, closed-end funds, or just QQQI or something, a high dividend paying stock. Let your money work for you right now and just wait to buy the puts till there's actually a signal to buy puts for something more than a scalp during the day, and then wait for the signal to go long again, because you're going to get contracts much cheaper. I mean, you can buy now and you can average down or whatever, but why? If you can just get them all when they're cheap, you can get more contracts if you get them all when they're cheaper than you do trying to average down, and you're gonna have a better buy price. So yeah, let's get on to um, marking out our levels for our 4-hour levels. First thing we want to do though is we want to take today's opening print, which is this price level 1, and we want to change it to the week's opening print. So this is 720, the week of 725. All right, so take that, we'll change it to the red. That way we know that's where the week opened. That was the very first print of the week. So we'll do the same for the day trade chart and the the scalp chart. Price level 1. All right, that's that simple. So there's the first thing that we do. So now let's get in here. Oops. Let's get in a little tighter here. And again, this is just for marking out our levels. It makes more sense when we're on the micro time frames, but right now we just got to get through the messiness. Activate. So we'll move the previous high of day to today's high of day. We'll move the 4-hour trigger to the high of the second 4-hour candle of today. We'll move the 4-hour trigger down to the low of the second 4-hour candle of the day, and we'll move the previous low of day mark to today's low. And again, if you want more details about why we have these marks, where we have them, what they are, what the colors mean, things of that nature, go ahead and check out our YouTube page, and we have a couple of videos breaking down how we construct our charts and what all these levels mean and why they come into play, especially on scalping and day trade perspective, which again I found myself doing more of these days than I normally do, but just with how price is going sideways and knowing that we are due for a pullback, I'm buying puts as scalps, but only as scalps because it does seem that most dips are being bought right now. So I don't want to overstay my welcome in these scalps. I'll take my profit. If there is more profit that's out there, that's fine. I got some. I'm hedging the calls, the longer term swings that I do have by getting a little bit of money. Probably sell some contracts here, just to hedge as well. Get some premium. Catch some people thinking that we're going to continue to run. If we get that signal that we're going down, this is what I'm thinking. Probably sell a couple of contracts and get some premium. And then if we really get the signal that we're going down, then we get deeper into puts as well. So that's how I'm playing it particularly. Again, I am not a financial advisor, and I'm not giving financial advice. But that's just how I'm looking at playing things. So we've got our week flip here. We got previous low of day, which is also the 4-hour trigger to the downside. We've got our 4-hour trigger to the upside, which coincides with the year flip. Interesting. And the previous high of day, which coincides with last week's high. Interesting. So again, we're in a 1, 2 up, 2 down on the 4-hour. The target or the magnitude being the low of this 3. The magnitude is always the candle to the left of the 1. That magnitude brings us coincidentally to last week's 50%. So frankly, unless Powell says something to get us going bullish, I'm kind of looking for the pullback to last week's low. That's what I'm kind of looking for. So let's go ahead and get our I'll go ahead and move the overnights as well, just because that way you get a reference for where we're at currently. But again, these will most likely need to be adjusted in the morning after Powell gets speaking, and after the London Open at 6:30 Central, and all of those things happen that affect our overnight highs and lows. All of that stuff will change. So, but for now, we'll just move them so they're easier to move in the morning. Oops. Come on now. Let's get to our scalp chart, and I only have the overnight highs and overnight lows on my scalp charts and day trade charts. I don't worry about it for the swings, even overnight swings. Um, I don't worry about it for a swing that I'll have for a week or a month. It doesn't really matter at that point. But this is strictly for day trading and scalping. So we've got our overnights moved. Let's get back, take the extended hours off, and get to our 4 hour. That way we can make our targets for tomorrow. All right. So this is just, again, for day trading and scalping. This is how we set up our targets. Right. We can go back. We've touched a little bit on our targets for the week from the weekly perspective to the upside. Maybe that's what I should start doing a little bit more, is touching on the downside targets on the day and week chart. That way you've got some targets. Well, I've got targets to look at to the downside. I mean, I have them in mind, but I know I haven't gone over them in a video. So, but just from a day trade scalping perspective, here's what we've got. So let's go to our notes. Let's duplicate yesterday's notes and just make the changes that we need to make. So this will be Tuesday, July 22nd. There will be 111 trading days left. These notes are from July 21st. The close price is $27.50. All right, and we've got so we got to make this green because, oops, why is that red? Because the week is red right now, and our opening print was what is it? 27.56. Opening print was 27.56. So the week goes green at 27.56. If we were to continue going down, the month goes red at 24.38. The quarter goes red at 24.38, and we're already red on the year. So if we're going back to the upside, again, we're already green on the month and quarter. So 27.56, a couple cents to the upside. We're back green on the week, and 28.13, where we rejected off of today, would flip us back to green on the year, which would give us full time frame continuity green to the upside. And that's what we're really looking for when we get going again. We can see that our expected move for the week is $2.69, meaning the high for the move would be $30.02. The low is $24.64. Right, so we've got that calculated, and we go to our chart. We can see this purple box is the expected move. So 30.02 and 24.64 down here. Right, so that's our box for this week. Monday, Tuesday, Wednesday, Thursday, Friday. We're expected to be in there, which you can see at the top of the box coincides with these daily broadenings that we've got here, right? Which this new 4 hour broadening is right here too, right? So $29.67, $30. Do we get to that point, or do we push down? $30 is a nice round number. Traders like round numbers, so it wouldn't surprise me if we get there and we turn around. But that's what we're looking at as far as expected move. Let's get back to our notes. So we do have some gaps above, which we've mapped out. We also have some gaps below that we've mapped out. But right now, let's just go ahead and concentrate the 1, 2 up, 2 down. 2 up, 2 down, right? The trigger is today's low, which is 27.45. All right, the magnitude is going to be the low of this 3, which is 26.76. All right, we've already got that in there. And we've got our other targets because we knew that could trigger previously, and that played into our notes, right? On the other hand, we would have a 2 down, 2 up, right? 2 down, and then a 2 up if we trigger to the upside on the 4 hour. That trigger is 28.14. Right? Oops. What do we got going on there? 28.14, because that's the high of this candle. If we trigger 2 up, the target or the magnitude is the high of this candle, which is 28.50. 28.50. And we can have extended targets out here. So we already got 28.50, so 28.66. I mean 68, 29 flat. 29.67 would be the next one. All right. So let's go ahead and mark out our triggers for the day, so we can see that if we go 2 down on the day, that's a 2 up, 2 down, with the magnitude being the low of the previous candle. So the low 27.44 is the trigger. What is that? 27.44. I think that's what that was supposed to be too. I might have fat fingered it. So 27.44. Right, 2 up, 2 down, with the magnitude. The low of this is 26.76. And then we've got our targets and everything mapped out still. Right. Now on the flip side, if we go to the upside, that's a failed 2 up, 2 up. So we'll give it a failed 2 up, 2 up. The trigger being the high of this candle, which is 28.50. Alright. Which is the magnitude of the strat on the 4 hour. And then we can see that the rest of our targets are out here. 29.67, and that would be a pretty stretched target. Well, actually not really. But if we were to get that 29.67, it would trigger the 2 up, 2 up on the week. And actually, did we go higher than 28.46? Yeah, 26.50. So 28.50. So we'll underline that, meaning we've triggered the 2 up, 2 up on the week. We're not still in it because we're below 28.46, right? Obviously. And then what we need to do is change this to 2 up, red 3, and go to our week chart. Alright. And that would give us a 3. A 3 would be, since we breached the top of this, we'd have to breach the bottom of this. The low is 24.91, which we have there. There's not going to be a magnitude anymore because it's going to be a 3. And the targets, what do we got? 24.62, 24.38 is the quarter and month flip, so I'll probably change it to that. 24.38. Since we don't have a magnitude anymore, we have a target 24.38. What's the low of this candle? 24.62. We already had that. Oh, I was on the wrong candle. I apologize. 23.58 would be the next target. And I don't think we would go that low, but we've got the rest of the targets mapped out there pretty well, right, to the downside. So again, we've triggered the oops, this is supposed to be 25. Right, so we've triggered the 2 up, 2 up on the week. Right, we went higher than 28.46. However, we did fail the 2 up on the day. So we have our triggers to the upside and our triggers to the downside, along with the magnitudes and targets for each as well. So we're going into tomorrow fully prepared. We can be looking at even a 5-minute chart, right? Say we get in on a 5-minute chart. Let's go to our micro time frame, and we know this is just by looking at it this year's flip, right? Just by looking at it, this is this week's flip, previous low a day, 4-hour trigger up, previous high a day, right? We've got all of these, the overnight low, overnight high. We've got all of these, which are triggers and markers for taking the scalps in the day trades before anything triggers on the 4-hour, right? So if we open up here and we push higher, we're above opening print, we're above overnight low, we're above previous low a day. Our target would be, previous high a day. First target really would be the 4-hour trigger, right? Because if the 4-hour triggers, then now we get back into our notes. Now that 4 hours triggered up and the magnitude is 2850, that's the next target, right? So 4-hour trigger, then the previous high day. Once we've gone above previous high day, that's when we have to refer back to our notes. What are higher highs, or what are other Fibonacci extensions, things of that nature, and those will tell us where things can turn back down. But for now, short term, we're in a downtrend. You can see I drew this 15-minute downtrend line early on in the day. Was this about 10:30? Yeah, once we got that flush, I went ahead and drew it. That way I knew when we would come back up and test it next. We tested it. We did get above it a little bit, but we didn't just fully break it. We came back below it, started a 1-hour downtrend in the process of doing that. And so from a 15-minute, 1-hour downtrend perspective, we are actually even a 4-hour perspective, we are in a downtrend. Now the 4-hour is just the start of a downtrend, right? So we got the higher high. Oh no, we're not even in a downtrend on the 4-hour, right? So we're just still higher high, haven't made a lower low yet. So 1 hour and below, we're in a downtrend, which could just be pulling us down to make a higher low on the 4-hour before we push back up, continuing the uptrend that we're in the 4-hour and the 1 day and the month. I'm sorry, in the week and the month. So, that's our analysis. Really just staying nimble right now, because we're not really in a trend on anything higher than the day. The 4-hour, yeah, we're still in the uptrend, but that downtrend or that uptrend could be broken if we maintain the 1-hour downtrend. So stay nimble. If you're gonna play intraday day trades or scalps, make sure you're following your rules, not breaking any rules and taking big losses. Again, if you take profits before the end of the move, if something violated your rules, then you should have no qualms about taking those profits. You've still made some profits, and you can always get back in. So I hope you enjoyed today's video. Hope you learned a little something. If you enjoyed it, give me a thumbs up. It would really help. If you did not enjoy it, or if you disagree with some of my analysis, I'd love to hear what your thoughts, respectfully, in the comments. But yeah, let's just really just grow this community that we have of people that are able to make profit every day off of an economical yet a ticker that provides a lot of upside, or high beta moves for a good price. Being able to make money off of that every day, to just have an extra stream of revenue on top of any other trading you may be doing, or investing in any other areas, or on top of your 9-to-5 job. We just want to build a community of folks that can make profit off of SOXL every day. So make sure you subscribe to the channel, hit the notification button so you know that when the videos go live on YouTube, and continue to follow along. Hope everybody gets some rest tonight. Make sure you're up on your charts, and everybody have a great trading day tomorrow.